is the market unhinged? You would say in the tech area, no, it's not. Why do you disagree with Novogratz on tech?
Well, if you look at the 2000 dot-com bubble, then you were dealing with tech companies being enablers of old economy companies, and with the consumer not having significantly penetrated, having been significantly penetrated by new technology, by everything that the internet has brought over the last 20 years. Now the consumer is, of course, the bulk of developed market economies. Now that reality has been penetrated, so we are having a situation where the real economy is being effectively disrupted by the tech sector, which was not the case 20 years ago. So I don't want to say that, you were saying, Yusuf.
Yeah, so just to flesh that out a little bit more, Luciano, because you also make the point that as much as the NASDAQ is tech heavy, in the last bubble and the subsequent crash, it was a lot heavier back then. So about 3/4 of the index was tech. Now you're saying we're down to half of that. I mean, if you are saying that there's a structural shift in our understanding of what kind of value is being added, does that mean you are still buying into the NASDAQ play right now? You're willing to pick up?
Yeah, I mean, over the 12-month horizon, I'm of course, over the say the next 3 months, I would be still concerned, of course. But over a longer term horizon, I still see perspective, because we are going to see a rebound, a normalization of economic activity over a 12-month horizon, and therefore I think that gradually buying into it still makes sense, but that could be loss-making over the shorter horizon. It's very difficult to time the market. It is important to notice that the market last week got a bit rebalanced, with the cyclicals again losing out and the growth stocks doing better again. I remain bullish over a 12-month horizon, but in the short term, needless to say, there are concerns. So I would,
Luciano, then
I would still be a gradual buyer, yes?
Okay, over the 12-month horizon, there is this new word which SocGen have put out a note on over the weekend, kurtosis. They talk about volatility. They talk about extreme moves being double the 3-year average. So this is the things that happen at the tails, and we touched on this a couple of times. But they have a strategy of how to trade kurtosis, which they call the W trade, which is to sell at the money vol and then buy extreme optionality of upside and downside. When it comes to selling vol, it's very, very risky, but they say because of central bank action, you can do this kind of trade. Does that make sense in terms of trading kurtosis in that way for you?
Well, so I'm not used to, we don't manage our portfolios by buying and selling volatility. I would say that the implied volatility has already, to some degree, normalized compared to before the crisis. And if we are moving into a world, sort of a new normal, where certain sectors of the economy, this great disruption, certain sectors of the economy disrupt other sectors of the economy, and we morph into the slow growth world where certain activities are being valued and are being transformed. As Joseph said, right now the NASDAQ is not just tech. I am not 100% sure that you can that you can really think about, the stock market. There will be volatility, but again, it has it is balancing a lot, and it makes somehow sense, because you have both markets are saying low growth, but mind you, the equity market is also saying slow growth, because it's saying, cyclicals and values, we are still very edgy about that. We are looking at growth stocks that are typical all-weather stocks. So it's not clear to me if the equity market is that far away from reality, in that it is, rebalancing.
It is a clear red flag to you. Yeah. Sorry, Luciano. We have to go to break.